Okay, folks, welcome to the members stock pick request video. This is where members submit stock symbols that they're looking at, not necessarily stocks that we're watching at the Contrarian Trader, but stocks that our members are watching because we like to engage our members. We'll review the charts. There is no upcharge. It's just part of the service, and it gives me an opportunity to field other stocks that may not be on my radar screen because my members happen to be very, very intelligent. They come up with some really good trade ideas, and that's the value of a community. So let's take a look at first symbol up, ARNA. This is a request from fellow member Barry, and the stock is Arena Pharmaceuticals. Obviously, what you could see here is that on Friday we had a very, very bearish reversal. Off of a nice rally last week, we found good support at $6.75. This candlestick implies to me that we're probably going to see a pullback, perhaps to retest $6.75. I would really have no problem getting involved with the stock at that level as long as you keep a stop loss just below the day's lows, say on Thursday, which was $6.65. So I would keep a tight stop on that trade, because if it fails, we'll pull back to the 200-day moving average and the 50-day moving average, and then perhaps if those don't hold, all the way down to 575. Volume was a bit high to the downside on Friday. The way this chart looks to me is that it's profit taking. This is a profit taking day. Doesn't necessarily mean that it's a broken stock. Weekly chart. Good uptrend. We pulled back. That 575 support level is very, very good support. You could see the topping tails last week. Now, if you wanted to hold off and treat this stock as a show-me stock, and what does that mean? A show-me stock is a stock that you're waiting for it to behave properly. You're waiting for the markets to tell you that the stock is under accumulation and that people are willing to pay the ask or use market orders to purchase the stock. Now, where would I get involved as a show-me trade? I like a breakout and a close above the declining downtrend line. And if we do see some good activity on ARNA or any of these stocks I go over, we just may send out trade alerts to members, letting them know that we like the way the stock is behaving and that we are either long or short of the name. So ARNA, I like it on a pullback with a tight stop, or on a breakout above 797 on a weekly chart. Okay, next stock up is from fellow member Kate, symbol EXTR, Extreme Networks. I'm not a lover of this stock, Kate, due to the fact that we had a pullback, a real gap down, my guess is on earnings. I didn't check that out yet because really I'm just focused on the technicals. Good support at 529. We did have a short squeeze on Friday, and we went right into resistance at $6 per share. Now, if we see a close above $6 per share, we will probably see a rally up to 658 or 675, which would mark the next real serious resistance level. Good volume on Friday. I mentioned earlier there was short covering. There was probably some institutional buying as well. You saw it back here a few days ago, and this is more in keeping with institutional buying, this high volume bar, not necessarily short squeeze. So I wouldn't short this stock. However, I wouldn't buy it unless we got a close above $6 per share. RSI is hooking up, appears to be breaking out. Double bottom setup on Williams percentage R. Weekly chart, good reversal last week, really good key reversal. Very, very important. However, don't be shocked to see a sideways consolidation and possibly a retest of the lows. That's a good thing. That's a healthy thing, especially if it holds. So I wouldn't short the stock. However, I'm not all that bullish on it because the uptrend on a weekly basis is now broken. So the path of least resistance longer term now is probably to the downside. So I would not be an aggressive buyer of EXTR. Next stock up is from Christine. Christine's got two stocks, CBMX and MSTX. Good pennant formation setting up. I would be a buyer of CBMX. This is a weekly chart on a pullback to the lower band of the rising uptrend channel, or on a breakout above and a close above this downtrend line. The stock remains in a long-term downtrend, but is in a tight consolidation. Note that you're starting to see the ultimate oscillator begin to break out. So the oscillators are really setting up nicely. Many times we realize or we recognize the fact that the oscillators will break out in advance of price. So CBMX is looking good. Some topping tails here that are a bit concerning. So I would be, again, a buyer on a pullback to the lower band or on a close above the upper band. Weekly chart. Next one from Christine, MSTX, Mast Therapeutics. Again, a weekly chart. Nice run off the lows of 40 cents per share up to a high of 110. You have a bottoming tail at 77 cents. Last week's price action saw resistance at the 150 period moving average. Expect a pullback. I wouldn't be a bit surprised to see a pullback to 77 cents once again. These 45-degree angle oscillators imply that we're probably going to see a hook back up. Volume to the downside rose above the prior weeks, which implies to me that you still have some distribution going on. And don't forget, where you're seeing resistance is where you had buyers back here in 2011. So these are people that are looking to get made whole on their investments, which was a bad investment for over 2 years. Now they're looking to get their money back, and that's what you're dealing with. Not with a sick stock. You're just dealing with people looking to get made whole. So I'm not an aggressive bull on MSTX. Let's check out the daily chart. Good consolidation. If you're going to buy this stock, definitely I'd use a mental stop just below 77 cents and look to get out on a breakdown. You could begin adding to it on a breakout above 91 cents per share. I'm a little bit suspect of the slow Stoke. Looks like it's got a little double top action going on, and that's not good at these levels. Next couple of stocks up for a fellow member John. Symbol NILE. This is a weekly chart. The reason why I'm using a weekly chart is to illustrate that the path of least resistance on NILE is down. I wouldn't short the stock. It's come way too far. The opportunity to short the stock is really gone now from a risk-reward perspective, and you even saw a bottoming tail last week. So I'm not going to be a bit surprised to see when all is said and done, say $31 per share on NILE. Volume is still quite high to the downside, so you have institutional distribution. Daily chart. Daily chart looks good. You had a nice key reversal on Friday, so you might see a quick pop, perhaps up to $34, $35 per share, but you keep in mind, as noted by these topping tails here, you have sellers above, a lot of resistance back here. So I wouldn't expect any rally to hold, especially when you have the 50-day moving average rapidly declining. And the probability of it taking out the 200-day moving average, a negative divergence, is quite high. That will probably put a lid on any rally. So I would be out of the stock. So if you're going to trade this stock, use a stop loss just under Friday's lows of $32.60, and I would get out. Next stock up is Wetseal. This is one I profiled a few weeks ago on the Best Stock Picks video because of an RSI of well below 15 at that point in time. But one of the worst things possible happened to the stock that I see when we trade extreme oversold stocks, and that's that they trade sideways, thus alleviating the extreme oversold condition, and we then lose our edge. So I didn't execute a trade on the stock. And you can see that we have topping tails, resistance at $2 per share. Oscillators are rolling over. I am not a lover of Wetseal. I would avoid unless we got a breakout and a close above $2 per share. It's really a show-me stock at this point in time. Next stock up for fellow member JT, PTOG. This is another stock that's on a Best Stock Picks video. I like PTOG. It's in a very, very tight pennant formation. I like the stock on either a pullback to support here at 5 cents per share or on a breakout above 9 cents per share. It doesn't matter to me if I pay more for the stock. I don't mind paying more or a premium for knowing that I'm right on the trade. For me to buy it in this range here, I'm going to need to get a discount because of the risk I'm accepting. So I'll buy it at support at 5 cents per share. Looks like we're rolling over on the slow stochastics. Volume was quite high last week to the down. Good price action on Friday. This is a doji star formation, sign of indecision. So we may see a trend reversal. The probability of a move higher is quite high, and we'll be watching PTOG as a long. I like the stock making higher lows on the slow stochastics on a daily chart. Double bottom setup on Stoch RSI. So the oscillators on a daily chart are looking good. Weekly chart is a little bit of a question mark. Next stock up is ANGI, Angie's List. This is from fellow member Victor. And real quick on going back to PTOG, JT, we will be sending out a trade alert when we get involved with PTOG. Angie's List, next stock up for Victor. We had a breakdown last week below the uptrend line. I need to see a pullback to this lower band of the rising uptrend channel before I got involved with Angie's List. And really, this uptrend channel is a very short-term uptrend. Technically, the stock is in a long-term downtrend. So the path of least resistance at this point in time remains down for Angie's List. I am not a lover of the stock. Inside day on Friday after a big reversal on Thursday. I'm not a lover of the stock, Victor. Too much risk, and I'm not seeing a great deal of reward at this entry point. Now, if it comes down to prior lows at, say, 1350, then it becomes interesting. It becomes far more interesting down here at, say, $12 per share where you had this double bottom breakout. So don't be a bit surprised to see the support levels retested. 1350, 1271, and then $12 per share on Angie's List. Next stock up for Victor is VRNG, Vringo Inc. We broke down, this is a daily chart. We broke down below the lower band of the rising uptrend channel. We closed there. That's what's really important to me. It doesn't matter to me where stock trades intraday. It matters where it closes. Now, if we would have rallied off the lows of the day and closed above the lower band of the rising uptrend channel, that's a bullish pattern. That's bullish price action. Even if it would have closed lower on the day, as long as it closed above the lower band of the rising uptrend channel. It did not. It failed. And you need to also keep in mind that you have the oscillators making lower highs. Price is making lower highs. So the probability of the stock pulling back to 390 is quite good. There's an area for you to open up a position because that marked resistance back in July. Resistance has now become support. And I would keep a stop loss just under, say, 385, 380 per share. But I think the stock heads lower. Next stock up is for fellow member Ron, PXD, the symbol. Pioneer Natural Resources. I like the stock. This is a daily chart. Good double bottom setup off of 164. A good breakout above the uptrend line. That uptrend line should now act as support. Good support at the 50-day moving average. We reversed off of it on Friday. Watch for it to take out 188.88 sometime next week. That would be a buy, especially if it closes above that level. Note the RSI continues to gain strength, making higher lows. Very, very important. Volume could have been a little bit more impressive. Not bad, but I would like to have seen it at least meet the moving average here in red. Stoch RSI looking really good. Oscillators are looking good. I like Pioneer, PDX. It's a buy. And we may just get long of it ourselves. Next stock up is EOG. Weekly chart. Good support here at 161. So this is the beautiful part about getting involved with stocks like this. Whether you wanted to use options, whether you wanted to use the stock, whatever you want, however you want to trade this, the beautiful part is about using weekly charts is that you know exactly where to put your stop loss point, right below 161.26. It's plug and play, man. You could buy the stock, set your stop, walk away from your computer. You never need to look at it. If you take out 161.26, you're going to 155.84. You do not want to be long of the stock. So I like the stock. I like it on a breakout above last week's highs of 177.25. EOG is a buy. GE, this is for fellow member Larry. GE found support at the lower band of the rising uptrend channel. This is a weekly chart, so the uptrend remains intact. The trend is your friend. So identifying the fact that we have support at the lower band here, plus last week we saw a bottoming tail at $25 per share. That shows us that we have buyers down here. So the path of least resistance remains higher on GE. The probability of it heading up to, say, $28 per share, which marks the upper band of the rising uptrend channel. Actually, it's higher, probably $28.50, is quite high. So GE looks good as a buy. Do I have my concerns? Sure I do. I would have liked to have seen more volume last week. Very, very light volume. So that doesn't mean you can't buy the stock. It just means that you need to watch the volume because you need institutions, especially with a stock like GE, to step in and buy up the stock to keep the rally going. And you saw that back here. So you can buy it. However, you're going to want to see these up volume bars increase to assure that the stock is going to proceed higher to the upper band, which would be our goal. It's a good trading stock. It really respects its support levels and resistance levels, so I like GE. Next stock up is for fellow member Al. PetSmart, this is a weekly chart. This was on our watch list, our buy watch list several weeks ago. I like PETM at either 62.50 or 62, even better, right down here where you have the support level. That's where we wanted to get involved with it. Now you have resistance at $65 per share. I wouldn't touch the stock unless we got to close above $65 per share or if we got to pull back to a good support level. And ideally, my support level is right back here at $60 per share, right where this blue line is. That's where I would get involved with it. Let's check out the daily chart because this is a very good company. Yeah, Al, you really need to pay some respect to the resistance levels here. Note on Friday, you had a reversal topping tail. It's finding it difficult to close above $65 per share. So by virtue of that price action, we need to say that this is a show-me stock. It needs to show us that it can either A, close above 65, or B, that it can hold the support level, either, again, $62 per share, or my preferred support level at $60 per share. A lot of resistance back here from April. It used this price point as a launching pad back in April. So we'll see whether or not it holds. Ideally, we want to see a close above 65. If you're going to get long of it, I'd use a stop loss just below $64 per share. Next stock up is VECO, Veco Instruments. This is a stock that's, or a company that's on my island here, Long Island, New York. And I know of it. I've traded it in the past, many years ago. And I can't say that I'm a lover of the price action. Yes, we are in an uptrend. I don't like the price action on Friday. I think that there is a possibility that we could break this lower band. I would be a buyer back here at the primary uptrend line at, say, $37 per share, in that neighborhood. However, I wouldn't be a buyer of the stock right now unless it rallied and closed above $40.75. Even there, you do have some resistance from $41 up to $43 per share. So just be aware of that. I am not a buyer of the stock. I would not short the stock. I don't like the fact that the MACD histograms are leveling off already. So I would be a bystander, a watcher of VECO at a lower price point, ideally, or on a breakout above $41 per share and a close at that level. Next stock up is for Kevin. Actually, the last one is for Kevin, and I'm going to go over two mineral stocks, precious metal stocks, GLD and SLV for Kevin as well. Listen, you could wrap these guys up into a bundle. It's no secret, I am a big lover of the gold mining stocks, precious metal stocks, and of the gold mining stocks. So this is a weekly chart. We are breaking out. Great double bottom setup at 114.50. And we have now broken out. I like GLD. Just be wary of the declining 50-period moving average. That will act as resistance. Note the higher lows on the RSI. Rising up volume implies that GLD is under accumulation. I like the weekly chart. Very little I don't like, with the exception of resistance coming in here at the 50-period moving average, and that's going to be at the 130 level. So just be wary of that resistance. SLV, this is the iShares Silver. Again, another breakout on a weekly chart. We are going to see resistance at the 50-period moving average. Just be aware of it. However, I think that the iShares, the SLV, is a buy, and a long-term buy at that. I like it a lot. Really good double bottom setup and a higher low on the weekly chart. SLV is a buy. All right, next stock up is symbol GALE, Galena Biopharm, for fellow member Dimitiri. Friday was a brutal day, closing down on very, very high volume, clearly institutional distribution. It was bid back off the lows of the day of, say, $3.20, and that was actually a pivot point, $3.19 back in November of 2013. So what was resistance is now support. And they did rally it to close back above $6. Scratch that. They did rally it back to close above $3.69. What to do with this stock? If you had to trade it to the long side, you could do it, but you need to put a stop loss just below $3.69 and keep your loss very, very small. Because if you close below $3.69, we're coming back down to $3.20, and will it hold? We won't know until it gets there. So I'm not a lover of GALE. I would not be a buyer of it. Thursday's candlestick looked like a good reversal, and then bam, you got whacked on Friday. So it's very, very volatile. Let's take a look at the intraday 30-minute chart. I don't like it. Big short covering rally off the lows, topping tails at 385. I think we get a pullback on GALE. I would not be a buyer of it. I'd sit on the sidelines on this one, Dimitiri. All right, last stock up is WTER. This is for fellow member Dale. And it's a bulletin board stock. It closed at 21 cents per share. I like it. I don't care what a stock trades for, what price. I like the charts. And on a daily chart, it's looking really strong, good pennant formation, and it appears to be on the verge of breaking out. So I would be a buyer of WTR, one tick above 22 cents per share. So at 23 cents per share, I would be a buyer. Or you could be a buyer of it now with a stop loss just below 17 cents per share. All the oscillators are making higher lows, very, very bullish. Weekly chart, note these bottoming tails. This implies that we have very, very strong support, but you need to keep a stop loss just under 17 cents per share, and we'd be an aggressive buyer on a breakout above the upper band of this declining downtrend line. And I will be sending out an alert. This is probably one where we're going to be involved with. So I like this one, Dale. Thank you. And I will send out a trade alert if and when we do decide to pull the trigger on WTER. And folks, if you're watching this on YouTube, please subscribe to my channel. If you're watching this on the website, please enter your email address. You'll get these videos on a weekly basis. My best stock picks, member stock pick requests, as well as some free trading videos on how we like to trade here at the Contrarian Trader. And everybody enjoy the remainder of your weekend. I'll talk to you soon. Have a profitable week.